It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast on our Saturday morning. Yeah, talking real estate and property news right across this weekend as we do 7 days a week. And you can catch us on iHeartRadio, Spotify, Apple Podcasts and Amazon. It is a Saturday, October the 12th is the date, if you're curious. And I see that from a few days ago, new analysis from CoreLogic reveals that 65 markets in Sydney and Melbourne where property values remain below their 2010s peaks, with some vendors willing to sell off at a bit of a loss, yet buyers are staying away. Now, despite improved affordability in certain areas, buyers aren't attracted to these markets due to, they say, mismatched supply. Sydney has 51 of these underperforming unit markets, while Melbourne's City region sees values still at 8.6% below the peak. And if you'd like to weigh in and join in on the conversation, you can do that, of course. Our email address is myrealestatepodcast@gmail.com. And to weigh in on our Saturday morning conversation, it's time to welcome back Anthony Landahl, who is in Canberra this morning, the Managing Director and Mortgage Broker at Equilibria Finance. And good morning to you, Anthony. That's pretty interesting stuff from a few days ago from CoreLogic.
Yeah, it is pretty interesting in the context of what's been happening in the market. I mean, these markets identified by CoreLogic, it's specifically in and around units, and it's specifically in and around markets where we've got a bit of a glut of unit supply, which is essentially not attracting the same sort of prices we're seeing in other areas and with houses. And as you say, there's some discounts going on in those areas, which creates opportunities. But yeah, it was an interesting read.
Yes, that was interesting from CoreLogic, and we're going to be talking about small businesses this morning because they are the backbone of Australia's economy, with approximately 2.5 million SMEs spanning diverse industries right around Australia. These businesses are often family-run. They're facing similar challenges to everyday home buyers, such as saving for a deposit and navigating their borrowing capacity and affordability. And SMEs, of course, play a crucial role in driving the economy forward. So first question for you, Anthony, is securing finance as a self-employed individual in Australia's real estate market. Now, this can be, and we've talked about this before, be very challenging due to fluctuating incomes and stricter lender requirements. Of course, lenders typically ask for 2 years of tax returns, although there's been a little bit of relief in that area. Financial statements, of course, and proof of consistent incomes, and some may require a larger deposit or higher interest rates. Demonstrating financial stability is really key to obtaining that all-important mortgage.
Good question, mate. As you said, there's a lot of small business owners, a lot of them are mum and dads, and obviously, like everybody else, are looking for their mortgage, looking for a home to live in. There's a lot of misconception around self-employed, whether they can get finance, how much more difficult is it? The way we approach it is it's a different set of criteria that we need to meet. Like with any profession, whether you're PAYG or self-employed, as you said, regular income stream is critical. So generally speaking, banks in overview are looking for how long's the business been up and running. Traditionally, banks have required 2 years of financials, whether it's tax returns, whether it's financial statements, and also salaried income that business owner might be paying themselves. But there has been more flexibility around now the financial statements, with some providers only requiring 1 year of financials. It's slightly different assessment criteria around financial statements and tax returns, but it does all come down to having strong, stable income being generated.
Yeah, and I think it's probably worthwhile just to step over and have a look at how self-employed individuals are assessed differently compared to salaried employees when applying for home finance. And specifically, what specific documents do lenders typically require, and how do they evaluate income stability? I mean, you've touched on it, but there is this whole business performance and borrowing capacity for self-employed applicants versus those earning a regular salary. And I wonder whether there are times for these self-employed people that just say, gee, I wish I was a salaried person.
Yeah, well, I think a lot of self-employed are saying that anyway, just to get a little bit more sleep of an evening. But aside from that, we have got fundamentally credit is looking at the same fundamentals about income, living expenses, liabilities and liability limits, and having a good credit history. Probably the main difference with self-employed is what they're looking at is the strength of the business. So they'll be looking at net profit. How profitable is the business? They'll also be looking at, has the director been drawing a salary? The way they're looking at the income is approached differently. They're looking at it at the business entity. Now, if you're a shareholder within a business, they might be looking at your shareholding percentage of what that net profit is. But fundamentally, they're looking at the strength of the business, which is where the business owner is deriving their income stream. When they're looking at that, they're looking at the profitability of the business, they're looking at any director salaries that are being used, and then they'll look at other add-backs in and around, are there one-off expenses, are assets being depreciated? So they're looking for that good, stable income of the business. In terms of the documents, we generally ask for 2 years of tax returns and financial statements for self-employed, as well as evidence of any salary being drawn. But there is some flexibility, and there are some new policies that have come out in and around that. But fundamentally, we're looking at the strength of the business and its income and stability over time.
And it is our Real Estate Saturday with Anthony Landahl. We'll come back and talk more about the self-employed next.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
And another agent in the area actually rang the owner to say, look, the garage door on your rental property is open and it appears that the tenants are vacated. Now, her own property manager didn't know that they'd moved out. And when she said to the property manager, can you please go to the property and close the garage door because people can access the house directly through the garage, the property manager refused.
It's a small token, $150 worth. Might have a bottle of wine, some crackers, some chocolates, but they will remember you as to somebody that is actually giving them something, because they're giving you all the way through the year rent. The least you can do is say, hey, thanks for looking after my property. Here's a bit of a Christmas hamper.
Yes, the property is our client's investment, right? It is part of their wealth building strategy, no doubt about it. However, it is at the tenant's home. And I think that, sending a gift at Christmas is a lovely idea with an attitude of respect towards those tenants and the fact that they are living in that home and it is their home. And I think that that's very important.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
And it is a Real Estate Saturday. We are talking to Anthony Landahl this morning. And if you are self-employed, you will know just how difficult it is when applying for a mortgage. Actually, I just want to pick up on the point with you, Anthony. There's always a question that the lenders ask about, is anything likely to change in the next 12 months? You can do this whole projection and say, yes, we're on target for a 30% growth, but I wonder just how much they pay attention to those forecasts.
Lenders, obviously, with small business are looking around stability, and lender policy has evolved over time. Some lenders now will just accept pay slips or salary that's being drawn. Some lenders will accept 12 months financial statements. Generally, lenders look at the rearview mirror, what's happened. But if a business is trending a certain way, for example, they might have had a drop in income, they might want to understand the projections. They might want to understand what's happened this financial year to date to give them comfort in and around the business performance and ongoing strength. So in consumer lending, it very much is looking at what's happened, show us your tax returns, show us your financial statements, show us your pay slips. But there are times when future projections or what's been happening in this particular financial year where we may not have a full set of financials is relevant to be able to demonstrate the business's strength and ongoing ability to fund the owner of the business.
Yes, because it's ever evolving, isn't it? This whole lender policy, it's evolved over a period of time, but it is constantly being tweaked, the minutiae of it all. And I guess from your point of view, you've got to keep pace of all of that, right, with all those changes.
Yeah, that's our job, and that's how we assist our clients. And it's a really good point, particularly with self-employed. There's a lot more flexibility, a lot more options for self-employed now. In some cases, a lot of the providers will actually just accept that the director's being paid a salary, so we almost treat them like a PAYG salaried employee if serviceability prevails, as long as the business remains profitable. Then you've got your other providers, your La Trobes, your Peppers, your Bluestones, providers like this who will accept business owners who might have only had an ABN for 6 or 12 months. They'll accept business owners who may not have a full set of financials. They'll accept more flexibility about how we verify income, whether it's through BAS, whether it's through accountant declarations, or whether it's through bank statements showing transactions. Even amongst the mainstream providers, there's more flexibility. And then we got the second tier providers who are designing products that assist other self-employed that may not be able to verify their income through those mainstream, or are newer to being self-employed and transitioning. Yes, some of those come with a higher interest rate, but it does suit a certain portion of the market to get them into the home buying space.
Okay, so that's a really good piece talking about the mortgage space for those that are self-employed. I think what we should also probably drill down on is for those businesses wanting to secure funds for the use within their business. What are some of the most common needs? Because you will have seen this from a mortgage broker's perspective where they're probably seeking out some of that advice.
Yeah, a lot of our clients are self-employed. A lot of them run small businesses or medium-sized enterprises and have requirements within their business, which we can also assist with. These might range from buying a commercial premises. These might range from working capital requirements to fund future investment or to fund operational needs. It might come back to asset finance needs for motor vehicles, for printing machinery and things like that. There's a lot of flexible solutions out there for small businesses now, whether it's buying a premises, working capital, debtor finance, invoice finance, and asset finance. So it's a different space, separate to consumer lending. There's a lot of flexibility and options there now for small business owners. And there's a lot of options now where they don't have to put their house up as a security, which gives more flexibility and peace of mind for them as a business owner.
Fantastic, Anthony. Wow, so quite a lot of information that you have covered. I'll let you get on with your weekend. We are in countdown mode, less than 30 days, of course, for the general election in the US. Lots to think about.
Yeah, there's a lot on across the globe at the moment. So, have a great weekend and take care, everyone.
Stay ahead of the competition with the latest news, insights, and data analysis on the Property Podcast that keeps you informed. We connect you to the best real estate information across Australia. The Real Estate Podcast.